Hi guys, today we'll be talking about how to maximize your chances of being approved for credit cards, loans, leases, and any types of credit in general. We'll also talk about the underlying lenders, the CRAs, which are credit reporting agencies, and APRs, and what roles they play in the success of your application. In this video, we will mainly focus on credit cards and loans, but everything we discuss here will also apply to your leases and mortgages and pretty much any other credit out there. To start with, let's have a look at different types of credit cards out there and see which one is suitable for which situation. Usually you will find 4 types of credit cards out there. That's your rewards credit cards, purchase, balance transfer, and credit cards for bad credit. Straight away, we're not interested in balance transfer credit cards. The reason for that is they're usually used in combination with another credit card for long-term borrowing. The way a balance transfer credit card works is that you have a credit card with 40% APR, i.e. if you borrow money for 1 year, you will pay 40% of that money. If it was £100, you would pay £40 in interest. So what you want to do is transfer that over to a balance transfer credit card, which usually has a much lower percentage, say 20% APR, and thus you will pay half of the fees on a long-term borrowing when using a credit card. That's the main purpose behind the balance transfer credit cards. For us, we are never going to use a credit card for long-term borrowing. The percentages are insane and it's not sustainable. Out of the 4 types of credit cards, I would exclude credit cards for bad credit because they have massive APRs, anywhere between 35 and 50%, and that's not what we want to pay for long-term borrowing. Now we're left with just 2 credit card types, that's rewards credit cards and purchase. Out of those 2, the most favorable conditions are usually on the purchase credit cards. Usually when you apply for a new one, you get something like 0% APR for the first 18 months or 12 months, which is great if you want to make a purchase and spread the cost over, say, 2, 3 or 4 months. Now the second option, of course, is to go and take out a loan. However, if your purchase is under £1,500, I would advise to use a purchase credit card. As I mentioned, 0% there. With loans, it's a little bit more difficult. You will have to have a paid percentage, and usually you can't close it off early if you want to. So you're stuck with paying the bill for, say, 12 months that you take out the loan for. But here we will discuss how to maximize your chances, whether you're getting a credit card or a loan or a lease or a mortgage, whatever it may be. Let's talk about how to actually maximize your chances. To start with, there are 3 main factors that you want to look for. First is the underlying lender. Second is the CRA, which is a credit reporting agency that this lender is using. And third is the APR, or percentage and fees that you will have to pay. Now, number 1, the underlying lender. Let's look at 3 companies. You have Aqua, Fluid, and Marbles. All 3 different credit cards on surface, but underlying lender is New Day Limited for all 3 of them. And what that means, when you apply for a credit card with any of those 3 companies, they just pass your information over to New Day. They will do the credit check and then they feed the information back to one of those 3 who you applied with. The problem with that is if you've been declined by one of those credit cards, most likely you will be declined for all other loans and credit cards that are backed by New Day Limited. The same with credit cards. If you apply for one loan and you've been declined, and then you apply for another loan which is from the same provider, you also will be declined. So what you want to make sure is to know who is the underlying lender of any credit that you're getting into, be it a lease, be it a credit card, a loan or a mortgage. You need to know who is the underlying lender, because if you know the underlying lender, you can find out what credit report they are using. And that brings us to number 2, which is CRAs, or credit reporting agencies. As it happens, most of lenders out there use different credit reporting agencies. You have 3 main agencies in the world, that's Experian, Equifax and TransUnion. In the UK, about 95% of lenders use Experian and Equifax. So what does that tell you? Some CRAs have different information about you. That means if you have a credit card and a phone lease, that information may be available to Experian, but not to Equifax. And if you go to Experian and get your credit report, you will see that information there. And if you go to Equifax, that information wouldn't be there. So when you're applying for a a credit with a lender, if that lender is using Equifax and the information on your previous credit is not there, you're much less likely to be approved than if you're applying with the underlying lender who's using Experian, who has all the information about you. If you know which CRA the underlying lender is using, you can actually check what information they hold on you to maximize your chances of being approved. In the description below, you will actually find a link to the website where you can look at what credit reporting agencies different lenders use and for different purposes. For example, for credit cards, underlying lenders may use Experian and Equifax together. For mortgages, they might use just Equifax. And for leases, they may be just using Equifax and TransUnion. So that's some information you want to be aware of before you apply. By now, you are probably wondering, how do I find out which underlying lender uses which CRA and which CRA actually has what information on me? To start with, you can find out the first information pretty simply. For example, if you're applying with HSBC for a loan, you can type into Google HSBC loan, what CRA or what credit bureau or what credit reporting agency, and more likely than not, you will find the information on the front page of Google. For the second one, which is how to know what information is held by which CRA on you, there is a website called checkmyfile.com. I'm not sponsored by them, but they're free for the first 30 days, and if you log in, it will tell you exactly what information is held by which CRA and will help you to merge the information between all three of them, so you don't have to worry about this issue when it comes to applying for any type of credit. Now let's summarize the factors that you need to take into account to maximize your chances of being approved for any type of credit. To start with, you look at the underlying lender, which is very important. Secondly, you look at what CRA that underlying lender is using, and then you look at what information is available to that particular CRA to make sure you have the maximum chances of being approved. You then look at the APR and the fees you will have to pay, and keep in mind that the APRs and fees should be somewhere on the same line with your credit score. So if your credit score is not 999, maybe you shouldn't expect to pay 1% APR for a loan. Finally, what you want to take into account is hitting that like button to maximize your chances of being approved for any type of credit. Thank you very much for watching this video. Hopefully you found it interesting and useful. If you want more content like this, click the subscribe button. New videos out every week. If you want to check out my top 5 credit cards for bad credit or my video on credit score, which one you're gonna click? This one, this one, this one? Well, I don't know. So thank you very much for watching and see you in the next one.
Triple up, they on a double up, triple dub. Came from the basement, we only going up. They loving us. Up in the booth, I'm getting dizzy, but they the cup is up. Toast to my people that's on the come up, and you live with us.